I'm Derek Wilkins. I'm here with Drew Nichols, and today we're going to talk to you about long-term care insurance and rate increases. Long-term care insurance premiums can go up no matter what a local agent might tell you. They can go up, and they do, and they have. It's important to know that before you buy this, that it can happen.
Yeah, I had a customer call me from Virginia today, and he said, I'm going through the medical questions to apply, and they go to great lengths to talk about their rate increase histories.
Yeah.
A lot of times that page may accidentally get left out of some people's policy applications, but the fact of the matter is a lot of the companies that have been doing this for a long time have had to raise premiums. And there's actually a logical explanation behind why they've had to do that, and that was one of the things we wanted to talk to you about.
Yeah, this is a relatively new industry, and I say relatively because it's been around since 1974, but if you compare that to, say, like a life insurance, I mean, they've had those for hundreds of years. So there's very new actuarial data. They didn't have very actual data, but as time has gone over the past 38 years, they've gotten better at predicting risk, and so they've improved the products, and they have become more stable.
The biggest reason why we've seen increases in the last 5 years is the low interest rate environment that we find ourselves in. So, I was pulling out the firebox, and there was some old CDs in there from the 90s that were paying 7.75% interest.
Wow.
And if I could get that as Joe Schmo, the insurance companies were getting, probably 8-9%, and they were pricing their policies off of expecting that kind of investment return. Fast forward to today, 2013, and rates now on CDs are, what, 1/4 of a point?
Yeah, they're paying nothing. So what has happened is the insurance companies can't take your money and go invest it and earn any interest on it. So the only way they can make up the difference is to have the rate increases. But I sat in on a insurance company president's meeting where they had a panel of the various insurance companies from around the country, and they all said that they're baking in just a 4% interest rate for the next 50 years. So they've really being conservative on these new pricing models for the pricing of products.
Yeah. Another thing about rate increases that I've noticed when they have happened is it's not generally a take it or leave it situation. So let's say you're paying $1,000 a year for an old policy, and you have a 5% guaranteed increase in your benefits. And when you started your policy 10 years ago, it was $150, and now it's grown to $210 a day.
Right.
You don't have to just pay the higher premium. Let's say your premiums go up. You can actually reduce your inflation protection down. Keep all the benefits that you've grown over those 10 years and reduce your inflation percentage and keep the same premium. So I don't think a lot of people are aware of that. When you get an increase, it's not a take it or leave it situation.
Yeah, you can always reduce benefits, and you can obviously, as you said, you can reduce the inflation guard, but you can also reduce the daily benefit. Maybe you had the 5% compound, and it's grown your benefits to a level where it's actually grown quicker than inflation, because we haven't had much inflation the past 10 years. You could always scale back that daily benefit to adjust to keep your premiums the same as well.
And if you're in your 50s, that's probably what I would do. I'd keep the 5% if at all possible.
Absolutely, because I mean, we're having low interest rates right now, but I think it's the consensus that we're going to have inflation at some point in the next 10-20 years.
So, just to sum it all up, if you're buying a long-term care insurance policy, you're making a great decision, first of all, but you just need to understand that the premiums may go up in the future, just like any other type of insurance out there on the market almost. Car insurance, home insurance,
right.
All these things, they do gradually go up. But you can always keep the same premium if you reduce your benefits.
Yeah, and just a quick history of what has happened with these major companies. Most of the companies who have been doing it 20-30 years have probably done about 3 to 4 rate increases during that 30-year span. So it hasn't happened every year, and any rate increase they do, they have to go through the state's insurance commissioner.
Yeah, they have to go through the approval process. So it's something to be aware of. Don't let anybody tell you they can't go up, because they can. And if you're buying this, leave some wiggle room for those premium increases just in case.
Yep. Well, anyway, thanks for watching our video today. If you're watching it on YouTube, please visit ltctree.com for quotes, and we'll mail them to you. Or if you're on our page already, go to the bottom of this page and fill in the form, and we'll mail you out the quotes from the top 6 companies.
Yeah, we look forward to working with you, and thanks for your time.
Yeah, thank you.